Hello, dear friends, esteemed traders, and brilliant community. Thank you very much for tuning in. Today we're going to take a look at IEP, that's Icahn Enterprises, on the NASDAQ. Recently faced significant challenges. We'll have a quick synopsis of the bullish thesis, the bearish side of the story. We'll look at the charts, we'll talk about the distribution of probability, and we'll help you with your trades. If you've got any, let me know. The show will end today and you'll be redirected to the really exciting first episode of the Traders of the Lost Charts podcast with your host Sarah Rara. It's brilliant, I know, because I helped edit bits of it, but oh my goodness gracious me, what a brilliant evening it is. You had Rocky starting the day, a live show from Tradespotting, an update on IEP, and then Traders of the Lost Charts. That's the really jewel in the crown of today's content. So, IEP. There has been a recent report from Hindenberg and criticism from the investor Bill Ackman. I see people saying things to me in the chat box there. Hey, I know those two guys. Yo, I've seen them before too. Hello, Mr. Azamat. How you doing? Great to see you, Eeksy Deeksy. Everybody drunk yet? Not yet. You're a day early, sir. Hey, Fern. Hey, Geck. Hey, Kitties. Hey, Wiki Wilkes, Tubes, Merrick, Nick G. Great to see you. Thanks so much for being here. So we're talking about IEP. I'm sure you have got a lot of knowledge yourselves about this, and anyone watching along, you'd do well to make yourself known in the chat box there to other knowledgeable traders. So Bill Ackman, he also took a pop. The IEP bullish thesis, high dividend yield. We talked about this before, has recently covered IEP on the channel. Currently offering a high dividend yield. Share prices as they are at the minute, it works out around 40%, which is huge, right? So if you're looking at this in a 401k, or you're thinking about your retirement, or you've got a dividend outlook, you might be thinking about the potential, this is bullish thesis. Bear with me. We'll cover all sides of the story, as I say. But this is an attractive investment for yield-seeking investors. Let's put it like that. $1,000 additional investment with no additional investments from a first period. So if you sit right now and buy IEP with $1,000 and hold it for 20 years with never putting in another penny, the potential return based on that dividend, if it should stay the whole time, is $2 million, right? So $1,000 invested at a 40% yield yearly, that is $2 million in 20 years, right? Do the maths. I did it. I was like, wait a minute, this is absurd. Let's check this out. And that's what it adds up to, right? There's other numbers I could have done, but 20 years is a suitable investment period. If you're my age, for example, you would be hard-pressed not to be able to find $1,000, right? You could, if it was your intention to get rich from trading, I'm sure you could find $1,000, which is why the course I teach is appropriately priced at www.technicalanalysis.school. Now, if you put that $1,000 in now and only took the yield and sold the shares, $1,000 worth of shares at the same price, this time in 20 years' time, you'd have $2 million. That's part of the bullish thesis, right? You can't ignore it. Interesting, right? And I think anyone that's looking at IEP would do served well to bear that point and watch this video. So if you're watching along, hit the like button, share it with your friends, get the word out there, grow the community, get even more people watching this. Imagine how much damage we could do. Right, so compound interest plays a significant role in that process. Expense reduction and potential growth. Okay, so they're going to cut costs. Despite stagnant or declining revenues, which has been a long-term problem for IEP, they have managed to lower their overall costs, right? The overheads going down. Where are those overheads? So the company has decreased interest expenses, which is very important at the current environment, and it's also reducing operating costs, which investors love to see, right? This indicates a focus on creating more of a sustainable business and positive, healthy sales environment for the company, even in this face of stagnant sales levels. That can't be taken away from the fact that the economy itself isn't performing particularly well. So IEP is not a standout in some sort of slow horse race. So The expense reduction, the cost cutting is setting the stage for potential growth once the company addresses the revenue challenges. This is the bullish thesis. Point 2. This is the third point. Sustainability of the dividend payouts. Although there are significant uncertainties surrounding IEP's ability to sustain its current dividend payouts, and with the reduction in share price, a lot of people would say the board there, which we know, would be well within their reasoned sensibilities to consider the dividend at that level, because that's to say, right, $2 million, 20 years, $1,000 initial investment, and zero work there afterwards. Still, stranger things have happened. The company pays out less than $0.6 per unit in cash, allowing it to maintain high distribution. Additionally, decline in new unit issuances and the low bar for sales and earnings growth may mitigate the potential dilution of existing holdings. Point 4, positive projected earnings, right? This is, we can't ignore this, though I think we should scrutinize this, but we can't ignore it. Projections should be taken with caution. Analysts forecast an increase in earnings per share for IEP in the remainder of 2023 and 2024. Bing bong. If those projections hold, the company will be able to cover costs, its growth needs, and continued distribution of cash to good old unit holders. Right, that's the positive story. Right, that's the positive story. Very, very bullish. Great, looks great, right? We're going to look at the chart now. There's a quick look at the chart. There's a gap. Price action pushing into it at the minute. Get any further, you'll be at 236 from this high and breakdown from this impulse move here, right? Which also leaves a gap, right? So you get your 886 back there around, there it is on the left. 886 also. If we go across to, say, daily time frame, get this guy up here, that 886 here, back above 50% retracement from the ultimate high, and 886 from the drop down is where you'd close the second of two gaps, which you find both on the 4-hour time frame very significant. So if you're looking for the topside targets of the bullish thesis, right, just closing this gap is an immediate target, 23.50, and then back above, close the next one 34 and change. So that's what some people will be looking at. And then onto the bearish thesis, because that is not all, my friends, and my friends don't all like charts. Weirdos. Bearish thesis, short seller and investor criticism abound. Hindenberg and Bill Ackman have raised concerns about IEP's financial position and leverage nature. This is because they use margin loans. You know, like you'll have known famous names recently that went belly up, Argos Capital and others, who take margin loans, right, in order to increase the size of the, we've got some fake capital here, we're going to do this with it. And Carl Icahn is quite good at using market machinations in order to benefit himself. So if he is taking this level of risk and this nature of risk, perhaps he has a hedge somewhere that other people don't know about. And Bill Ackman likes to talk about these sort of things, but doesn't know the full story necessarily, nor do we. The argument is that the company's sustained losses and the increase of new units indicates that there is potential problems. So why would they take these actions if they didn't need to? Criticism has already caused significant decline, as you saw there on the chart, and that has erased billions from Carl Icahn's net worth, right? So part of the bearish thesis might have to include perhaps Carl Icahn was just lucky for 70 years, is actually a huge tube, doesn't know what he's doing, and this is a massive, massive problem with a huge hole in the bottom. And that may well be true, right? And or something that he didn't expect caught up with him, though it would be hard to see how he didn't see it coming, but there we are. So we have to include this. Revenue fluctuations. This is also something that investors don't particularly like to see. IEP's experienced significant fluctuations in trading and investment revenues over recent years. These have resulted in gains and losses for the company. It makes it challenging to evaluate the overall performance at any given period in time, any given snapshot. While expense reductions are positive, volatility in revenue is a challenge, right, for them, and then obviously anyone trying to assess true value of the company, and then likely leads to volatility as sentiment changes, right? So you follow along. Risk of the distribution cut, right? That's nice terminology, isn't it? Saying this nicely. Now, IEP's high dividend yield is attractive, as we say, but there is a risk of a potential cut even a 50% cut in the current dividend rate would still provide, you know, you can do the math yourself, right? It would still provide quite a high yield compared to the market average. However, such a cut could trigger further declines and an adverse reaction to the market generally and sentiment as we speak about. Share price negatively impact investors' holdings, could go down long term if you're not aware of this, so you have to be managing your risks with regards to IEP, even if you are bullish. Regulatory and legal pressures are also on the horizon. IEP's reorganization plans include asset swaps and new fundraising. It's been put on hold due to pressure from shareholders and a current ongoing investigation from the Department of Justice. Now, they're the big guys, right? They've got the full, right? They come in with a full walloper there over at the DOJ. These regulatory and legal uncertainties do certainly add to the overall risks associated with trading IEP. So, as we say, bullish and bearish cases, both. We looked at the charts for potential targets to the top side. We'll look now for what might happen if it breaks down and continues the trend that it's currently in. And as traders, we must look for continuation or good reason not to. And we can conclude then that IEP presents potential for investors. High dividend yield and cost cutting has provided optimism for long-term growth potential. So perhaps if you're looking at this in terms of an investment, you'd have a different perspective from those who are trading, and therefore you'd be able to manage your expectations differently and your trade. However, there are lots of criticisms from short sellers, revenue fluctuations, risk of a dividend cut, and regulatory pressures posing challenges to their investment prospects. So consider both sides of the story carefully and conduct your own due diligence before making any investment decisions related to IEP or anything else for that matter, right? So back to the charts, and here they are. If you're looking for this to continue breaking back down, well, breaking below 21 spot 41 would be this failing to hold 236. That's 236 from bump. This breakdown here and the top side of this gap, just to show you with that arrow. If it does break below there, then your prior low after the body closes would be significant. You can see that you've got a body open and body close and a degree of support and resistance in at that 236. So I'd expect at $21 there would be a little congestion if you come back down. You're not yet out of the bearish control zone on the RSI, so very cautious there. You can see that. Whoops, you can see though, back above your own moving average and trying to recover inside this gap but not closed it. The fact that you've made it in and not closed it once, twice, three, four times there on the 4-hour time frame, that's not particularly positive. That you haven't gone back below the 236 though means that you haven't yet faced a test that would be the equivalent of that we're asking it to do now and fill in that gap. So the break back down 236, in advance of that you've got $22 spot 0. I break there, it's 21 spot 14, but really you're looking at $21. If that doesn't hold, you could see it wick down to 20 spot 50. That would be last chance saloon. Otherwise you'd be coming back, test the body close at 18.88. That doesn't hold. You have your wick low at $18. There are quite obvious targets. If you're looking for this to put in some sort of extension back down again, and say it does close that gap and then fail, so you have a 236, you'd be looking at something like, you don't actually have enough of this now, we'll go for this guy. The breakdown that came in at this high. If you're looking for extensions subsequent to the previous low, you're looking at come in testing 15.50 and then back down to $10.97. $10.97, totally not impossible. Go to the weekly time frame here. Can we get enough on? See these previous lows and where this thing's wicked to before you break down. You break down from 22 previously. The next support was 10. So despite the fact that those distances are huge percentage moves from where we are at the minute, those are the targets, right? And also for Confluence, 2-day time frame Rocky Outcrop's got a flash in at 10 spot 01. So at some point it may well make its way there. Is this the moment? Well, it's not trending to the top side, so our targets, should it move up, are quite reserved and all within previous highs. If we're looking for lows and we're bearish, we've identified those that are immediately available and those that would become a priority should price action fail to hold support. So that is IEP. Oh my goodness gracious me, what a fantastic show this is. Quick market update on SPY. Down to the 15-minute time frame. Hit the automification button. You see, had a strong period towards close today, having pushed down previously. This is because a couple of positive words from doves at the Fed. You've got a number of people that contribute to the decision makers at the Fed, you know, the heads of all the federal state banks, and they get together and chip in, and that's who it is that have these big important conversations with Jerome. He sits at the top of the table, obviously, and they eat wild boar, really, with like their hands and no knives and forks and whatnot, and they fart lots and burp, and that's supposed to be a sign of respect for each other, and they do this once a month. Anywho, so, you know, a couple of them are quite positive, you know, calling for a pause, but then a number of them are quite naive. So it takes more than two, you know, regional heads of the Fed to make a pie, that's for sure, right? So it does, and no one likes dove pies anyway. They went out of fashion back in the Great Depression. So nobody's interested in eating doves nowadays. So why are we talking about that anyway? Yes, so they're bullish, but like that's strange. Obviously, everybody has like different pressures that come to making their minds up, and I think that an assessment overall would say that the Federal Reserve are very, well, they're reserved. They're very conservative with a small c. And they've definitely, ahead of pausing rates, they have the ability to say, we may pause rates at the next meeting, which would be, you know, appease those people who are currently dovish, that is, that think we should pause rates at the minute. And it would also be raising rates. So the hawks, the people who are bearish and want rates to rise, they'd be satisfied, and the doves, they'd be, you know, we tend to think of them as left wing, and those people, they're kind of happy with platitudes and fake promises. So you can just, you know, whisper stuff to them, and they'll be like, wow, really? And then they'll be like, yeah, man, we'll maybe pause them next time. And they'll be like, whoa, thanks, man. And then you don't, right? And the hawks are like, yeah, man, like, just tell them that, and they'll be like super happy and whatnot. So you can get away with that. You know, that's a potential avenue that if I was in charge of the Federal Reserve, I would definitely explore, because everything's a test, right? And so we'll test that side of things before we just like suddenly change our mind. Then you'd look like you yourself didn't have a plan in the first instance. And these people don't want to be caught with their pants down. And we also don't want to reduce rates too quickly, because it'd be really bad for the world, generally speaking. And there are little other tools, like the way that they provide guidance along with these meetings, and that's what we're expecting. When it comes to SPY, then, yeah, good positive move into close, because a couple of regional heads of the Fed were dovish. But if we put it all in context, rates haven't slowed, they've slowed, but they're still rising, and they're rising faster than a lot of people expected. But you know, overall core inflation, we could see that we're at parity with the Fed expected with regards to overall money supply, and we can see that there's also a little bit of easing on the various mechanisms for providing liquidity across the domestic and international markets. So, and also bank concerns have been easing. So do we really need to worry too much about that? I mean, it didn't play into the decision last month, and along with the guidance, you know, we didn't see not much about it. So I expect that the same will be true, and that we expect that ahead of any pause in rates, we'd get rate rises, we'd get positive confirmation of that potential communicated to us. This is how it's traditionally gone. So we're looking at SPY, positive move into close, but overall markets opened with a gap to the top side, i.e. they opened bearish, and then they pushed back up and failed to close that gap. So Rocky Outcrop was live at open. If you didn't see it, you're missing out. This was in markets opening. Where was it? Yo, Sputter, 5 minutes. What? Well, you were here, right? You don't need to see it, but it was somewhere in and around. Where was it, Sputter? See, this is what happens when you live on the 15-second time frame. You kind of lose Kind of lose a little bit. Am I even on the charts? I am, right. So, what was this it, right? Down here? Yeah, something like that, right? So, and price action pushed back up. Good to see. And then we had a really strong move at the end of the day there. Was that it? What is going on, Spotter? No. Where is it? Is that it there? What did we close at? 417. Oh, did it come down again? I was doing this show right at close, wasn't I? I did a wee bit, eh? That was me. This was what I was talking about. 1 minute to close. Wait a minute, I've got extra. I've rest regular hours. What's going on? What is going on in real life? Oh yeah, I'm back on the 15-second time frame. How did that happen? 5 minutes. Anywho, right, so it was just a bit of a rejection from that 5 minute 200 period moving average and whatnot, wasn't it? Also, you came out and met that diagonal resistance, went back up and touched the top of the bearish control zone. Pardon me, I'm just filling myself in case I decide to look at this later. 50 simple, haven't found a 200. Interesting, right? And then post-market, not all that much happening yet. So price action, yeah, this is it, the gap. We opened at 419, and then you got positive news, came back up, tested that 100 moving average, downward sloping resistance. If you go to something significant like 30-minute time frame, you obviously didn't open above it, right? So you kind of actually found rejection right on it. With the 50 simple period moving average catching that descent and coming back, test the low side of the gap. That's not fantastic. If you were to fill that, 419, spot 65, fantastic. If not, I'd expect you to come back and test these prior lows. If you're looking at the open interest, close the week, whereas that's not 31st, not what I'm looking for. Though this is the end of the month, so other things to be aware of, folks, for trading, especially if you're trading future contracts. So there, 400, the highest node, 410 and 415, put to call ratio 3, right? So dangerous to the short side. And then 423, 428 top nodes in terms of highest volume and strike price that will be relevant with regards to support and resistance. And then you can see that 417 is where most of the decision makers live. 417 splatter. Right, well, that's where price action is at the minute. So more volatility ahead, right in the dead zone there. What's the max pain as it happens? Do I really care? 418 spot 833. Don't really care. It's not interesting. It's below the gap. And it's above where we are at the minute with a bit of a wick at the end of price action today. We'll see how post-market goes and what it looks like a pre-market tomorrow, but it could be that we're in for more volatility. And with these mixed messages at the Fed, well, I'd be playing my cards close to my chest and very cautious when it comes to trades towards Friday's close. So how is everybody and what you're seeing in chat box? Hey, Jose. Hey, Lipton. Great to see you. Yo, Merrick. Yo, Lisa. Brilliant to see you, Lisa. How you doing? Yo, Lipton. Lisa. Colin. Jose. Brilliant. Adam. How you doing? Are you Irish? I am 50% Irish. Both parents Irish. And I was born in Scotland. My dad's mum is Scottish. So there's that. But then I moved to Ireland when I was young and lived there for my formative years. So then I've got that too. So I'm Scottish-Irish in every sense of the word. But I really do like paella, and I love the beach, man. I really love the beach. So how does that all go together? I don't know. Maybe I secretly wish I was Spanish. Right, so yes, where are you from? Where is everyone from? Let me know in the chat box. Where are you from? I was looking recently, my audience members, like it's always been, not always, but it's nearly always been America top, and then Britain, Canada fighting it out for second place on the viewership, and then third is often like Sweden and Germany, because GameStop, they're both present in those countries and a lot of investors there. And then Swedish people are, I'd say, going by the audience, I'd say Swedish people are more into trading than most nations, you know. I don't know why that is. Maybe just Swedish people can actually understand the words I'm saying, which would be unusual because they don't speak English as a first language necessarily. Thanks, XD, you're welcome. SPY dropped way down, then pushed right back again. Yeah! Jamie explains probably the answer behind it. Did I explain it? I didn't know if I did explain it. You did it there. That was much easier. I believe GameStop has earnings tomorrow. Oh my goodness. GameStop earnings tomorrow after the podcast today. Oh my goodness gracious me. Well, look at that, Lee. Look at that. Flash back down at 23.52. That would be testing this channel. Price action's been following along this channel. You know, I haven't done a show every single day on GameStop, but I've covered it pretty darn good, folks. 50 simple period moving average there in the 30-minute time frame has been a relatively good gauge of price action. See the 200 simple there and the previous level of support at 22.74 may become relevant. 1 hour time frame, you've got that 50 simple at the 23.35 flash. That would be breaking this channel where you see a touch of bearish divergence. Un, dos, tres. There's that Spanish coming out again. So it could well be that you do take a little bit of a turn here and see you're also at this downward sloping resistance that marks the top side of this channel and price action today on GameStop. Give me my details. What's the details? How do I get the key stats? Is that it? That's my key stats, is it? No, that's the volume. That is not a key stat at all. Where are you from? Tell me in the chat box where you're from. I'm going to check in a second. You can't see because you aren't looking at the charts. Charts are not visible. I see that they're not visible. It's 3 smiley faces for you. We wanted to look at the... what's the high of the day? I mean, I can just look at it on the charts instead of looking for... Right, so the high of the day, Sputter. Saboteur. Well, like the high of this move was 24.78. Nope. 24.84. Anyway, it was up there, right? And the high 24s. High in its pine tree bed. 23.35. It's hard to ignore that, isn't it? Let's get off that time frame so it's slightly easier. The 50 simple going through the 200. Price action continuing to the top side. Sure, you've got bearish divergence, but you haven't slipped below the center line yet. Though, let's be frank, right? You're at this downward sloping resistance. I can go to the weekly time frame and show you how since that line, that downward sloping diagonal line, exists on a weekly time frame, right? Exists on a weekly time frame, and you know, so a lot of people who are selling covered calls will be looking at this price now, thinking maybe this is an opportunity, you know, as it was here, and it was here, and as it was here, and as it was here. Be cautious with the fact that this managed to break out of this downward sloping diagonal, but didn't exceed the prior high. So where would that bring you to if that was to be the same this time? Well, here's your prior high, where as you can see, we've got a target mark there, which we marked in around these lows, as the target in at around $34, $35. Also got green line. You remember those green? Here, remember them green input, right? So we've had this on for ages, right? That was where we think it would break to if it breaks this downward sloping diagonal. That's just great news that in order to do that, we had to test the downward sloping diagonal. So we've now made that. It did move sideways a long time, and as its nature as a nasty downward sloping diagonal, then it met us lower than we would have liked. But it is what it is till it is what isn't. Shout Rocky Outcrop. Check out Rocky Outcrop on YouTube if you're trade any of these tickers I've mentioned today and you want to learn more about how to trade just to manage your own risk. You don't have to become like a trader as job like me or Rocky himself. You just want to, if you're ever interfacing with the markets, you're interfacing with risk, and the better you can manage that, the better your position will be. And there's two sides to that. It's buying and selling. The way that you do each would depend on the charts and the areas, of course, but you can learn an awful lot for free and dead quick if you check out Rocky Outcrop's playlist, the education playlist on YouTube. It's free, obviously, right? So some of the videos you have to be a member of his channel, but that's like a good decision too, right? So we're looking at 50 simple also in around these areas. I'll take off the drawing so you can see there's the 50 simple period moving average. It's very significant. It's from the weekly time frame. Having recovered to 200 period moving average, testing the 50 simple might have been all you would have asked for. If you're a very reasonable individual, you might have asked for that and said, no more. That'll do me, sir, no more. But I love my porridge, and a little bit further would take you up to 27. And the prior high, the very first one you'd reach if you did break this downward sloping diagonal. The next significant one, it'd be up around 35, which also matches up with the 50% retracement on price action here. Oh, you aren't looking at the chart still, you bloody idiots. Man, you guys are ridiculous, right? So this is what we talked about, right? You're selling covered calls, great place to have sold them. Great place again. Subsequently, this high here also very good because you had this deep retracement to the bottom side of the channel. You came back up again and retested that same high, and that could happen again. Should it happen, this would be the next potential area for it, right? That would be quite extreme though, because there's also a high If I turn off the current drawing so you get a quick glimpse, this previous high here at 27 bucks. So if you're to break the 50 simple period moving average, which you might have expected only reaching and no more, having recovered the 200 period moving average previously and putting in prior lows quite deep, you might then have not anticipated getting further than this 50 simple. But now that you're here, we can ask a question. And the question is an immediate hard, well, you'd be very fucking lucky, wouldn't you? It's this downward sloping diagonal, right? It's been persisting over price action since, well, I mean, since January 2021, right? Which was ages ago. Remember they called it COVID-19? Like, that was a really massive oversight, because at the same time they were calling it that, they were treating it like it was going to last a decade. It's like, whoa, guys. Messaging is all wrong here. Anyway, so that's something I need to focus on. This is not financial advice, right? And everybody makes their own decisions anyway, I've learned, despite the fact that I call it better than anyone you'll have ever seen on this platform. So there's the 50s other than potentially rocky outcrop, right? And I say potentially, I know that's true. Rocky, hats off. Right, so there's the 50 simple period moving average, and you're looking at $27. That'd be the next target if you break above it and you break out of this downward sloping diagonal. If you were selling covered calls at that point, would you be buying them back when it got right there? I mean, that's the target we're talking about. If it breaks up, that would be a stop, maybe. If it went beyond there on different types of trade or hedging this, that. But if you're shorting this, you're probably crazy. And then you're looking up at around 35, the next target, if it breaks that 27, 35. If you break all that, you're going to 50 bucks. You'll 45, 50 bucks. Coming in, test this significant level. And if it does break back above, 27, 34, while it seems bonkers, and it is, and it will be, bing bong. Also, once it gets there, that doesn't mean it's the end of the story, right? Because you've already defeated an awful lot of those reasonable people, and it could well be that it pushes on, you test those 45, 50 bucks, and that would be crazy town, right? See it back, that would be crazy town, right? So, does it look like that's happening right now? Well, we've got earnings tomorrow. I'm not anticipating them being super fantastic expialidocious. What's the overall consensus in the chat box? We thinking minus 15 cents, plus 15 cents, below or above minus 15 cents, right? So above minus 15 cents would be minus 14 cents. Is it following? Right, so that's the poll question, right? GME earnings. It would be better written like this, wouldn't it? Above. Right, you follow in here. And then below. I did this poll recently, but some people will be watching who didn't see that. Right, so that would be, I'll have to also put this. That'd be bullish, right? Right, and I could have put in I've noticed that people on polls on channels I respect put in an option for people who don't want to make a decision on the poll question but still love a little poll vote. So I didn't do that at this occasion, but we've got a quite clear choice, frank and clear choice to be made. Right, so this is this box. We've also drawn this box. You've seen this box for a while. Looking at this, very interesting. You go down to the 4-hour time frame here, and you can see the 50 simples above the 200 period moving average. When we were most recently at the basis line within this channel, we got bullish divergence and moved to the top side, recovering both those moving averages and creating this positive linear trend. So if you're looking to have a positive arrival at this destination, you had it, right? That was it. That was a sweet move up, man. That was awesome. And like now if you're thinking, well, do we go up from here? Well, that's much better than going straight from 18 bucks and one day later you're trading at 26, right? We've done that before in here, 15 up to 27, and it resulted in that retracement back down to 18. And it was a slow and agonizing one for anyone who bought it back up here, having watched it be so much lower for so long, right? Months and months, maybe like a year, was it? And then they bought it a prior, nightmare for those folks, right? Whereas this retracement was obvious after that, especially when you lost 200 period moving average, you're going to at least come back and come around this gap, right? Look at this huge gap. So this time we've arrived in style, right? Without sweat all over us, late to a date, though, right? And You know, and you arrive late, so, and it's raining anyway, right? Because it's Scotland, and you arrive late, and despite the fact that you got a taxi, you're still late. And it's not great if you're also like perspiring and it's raining on you, right? That's not a great mix. It really isn't. And the person you're going to meet, they've already just gone inside the place. You know, that's not cool either, because then they're arriving inside on the road. That's not cool. You know, I do that frequently. That's the way I do things. Don't know why that is though. It's like I don't mean it anyway. So, but nobody believes you. So you're looking at this. Who cares, really, right? I mean, I do mean it. It's like, who cares? I didn't want to go in the first place, right? You know what I mean? Like, I could have been. You know, it cost $10,000 to get me out of the house. That's what it really should be. Like, I should put that on my profile, right? So you're looking at this thing, and a 236 retracement would be back down around that $23, $22. Yeah. See, GME explodes. I'm going to be more than 10,000, right? It'll be triple X in that. Right, so you're looking for this thing to break to the top side. Earnings tomorrow could be positive. What's the poll saying? 84% of people are bullish, thinking it'll be above 0.15. If we not got earnings written on this thing, like they usually give you, there it is. Right, here it is, 0.15. This is the average estimate across the board from the analysts. 1.343 billion on revenue. So, like, also the way that GME go about things is that they don't signpost how they're going to do their accounts, and they don't tailor them for the way that the markets would like them to. And I say the markets, I mean those people who would have a perspective on how it is a company should structure their accounts and how they should be submitted in order to provide guidance to people, right? Some people expect, and if you're a tech firm, then you'll be attributing costs in particular ways. You'll have a particular type of cost bases, and you'll have a way of drawing down revenue and attaching it to each cost center, and then you'll work on efficiencies along those hierarchies. And they want to see accounts distributed in a way that makes them think, yeah, I know what's going on and whatever, which is how they would put it in a positive sense. But people like Ryan Cohen and the culture of the board at GME, they think that these consultants and like these analysts can go and do one, right? So they deliberately go out of their way to make it known that they're not going to cater to that audience, which some people like, other people don't. Anywho, that's the thing. And oh my goodness, it's only 15 minutes till the podcast starts, right? So I think we've covered all of the main topics that are of interest to people today, right? We've got our friend Carl and his company IEP and how it's doing. We've got a lot of contextual information, like especially if you watch the previous things we've done on IEP. We've also spoken about your friend and mine, Ryan, and what he's looking at his own perspective with regards to how they provide guidance. He's on the board, obviously, he's the chairman, but he won't see him having an earnings call. But obviously that the way GameStop evolved, a big part of that is his approach and his way of communicating, cultural side of things there. You know what to expect. So if there is the revenue, the point I'm trying to make there is like, you can well and good like get close to the revenue, but that doesn't necessarily translate into the way the earnings per share work, because you don't know how they're doing their costs, where they're going to attribute them, or at what date that they're going to arrive on the accounts and whatnot. So you can't actually say, and GameStop don't go out of their way to make it easy for the audience that would require it to be like that. So, you know, fundamental analysis and whoop-de-doop-de, it's at the top of this channel. Risk would be high. But then it's a news event, so I'd suggest that typically your advice would be to manage that risk across that period of time anyway, where you would experience typically increased volatility. So it's on you to do that, but the way it would be manage any potential downside moves while still being able to take advantage of anything that moves to the top. If you want to know how to do that, you go to www.technicalanalysis.school and you take the course, right, which is reasonably priced. And you'll benefit greatly from doing it, right? So that's the thing to do, right? And if you've got a significant GameStop position, I strongly recommend you do that. So if you did break up, we talked about the prior highs. If you do break down, don't want to talk about that, right? So you'll have your stop, it'll be following price action close. And we covered everything because you've got the podcast, Traders of the Lost Charge, coming up, and I can't wait to watch it. Right. Thanks everybody for watching. Did I miss anything? I might have done. What did I miss? Probably shitloads of stuff. What did I miss? Probably stuff. I'm going to have to get to it tomorrow. What day is today? Wednesday, because it was all the podcast. Wednesday. So tomorrow, I'm going to have to get it to tomorrow. If I missed it, super sorry. What did the poll end on? 81%. 19% below. Okay, nice. That's quite good. Take the course if you haven't already. Yeah, take it again if you have to. Right. So, 26 votes. Not a massive sample size. Obviously, you would anticipate people here being bullish as a base level. And then 1 out of every 5 people approximately bearish. Eh? Well, that's not necessarily the full story, because earnings per share, like I say, could be terrible, but revenue could be way up on expectations. Obviously, the market wouldn't like that, but market doesn't know what it wants. It gets what it wants. Once I know it wants what it gets, yeah, that's it. Eventually, well, the last verse anyway, we changed it, so they didn't notice. They were drunk on the chips. Right. Thank you very much. Hit the like button, share this video. I'm sure you've got friends. If you like this video and you have a friend, then they'll like this video, because I'm a little bit different from most people, you know. So thank you very much. Check out the Rocky Outcrop show. It's coming. It's coming. The Sarah Rara traders off the lost charts. Brilliant, brilliant. So it is. Lucas is on it. Brilliant. So it is. Thanks for watching. Great to see you all.